So now we come to the part of the show, a very popular part of the show, where I talk about three things that I believe individual investors need to focus on before they make their investment decisions. And as I mentioned off the top of the show, one of these ideas really has been dominating the markets. And that is our first point, which is AI disruption spreads to many sectors of the economy. At one point, we all thought that artificial intelligence was going to be this great thing for business, for society. It was going to revolutionize the way we do everything. And it's starting to do that. Obviously, it's just in its infant stages, but we're now starting to feel some of the negative effects of artificial intelligence. And we're going to touch on that in just a moment. NVIDIA earnings could be huge for the markets. NVIDIA will report their latest quarterly earnings in the next, I believe, week or so. And as we know, NVIDIA, largest company in the world, so important for the markets. And our third point, U.S. inflation and Q4 GDP numbers from 2025. We're going to get these numbers on Friday. And always market moving when we talk about PCE, which is the number we're going to get, personal consumptions and expenditures. And we're going to get a Q4 GDP number and a whole year GDP number out of the US. So very much market moving. So let's move to our first point, which is the AI disruption spreads to many sectors of the economy. And I guess if you had to ask, why the volatility is happening, and we often ask, what's going on right now? Why are the markets behaving as they are? Well, we're all pointing fingers at artificial intelligence. What does that mean for business? Are people able to create their own programs to compete with some of the businesses that exist today, the Salesforces, the ServiceNows, the Adobes, etc.? Could just the average person use artificial intelligence to create some of the things that these companies provide? And if they can't create it as well, perhaps they can create it close enough that these companies now need to charge less for the services that they offer, because there is a lot more competition now with artificial intelligence. Names like Anthropic creating these new, what we call plugins that are able to, change the way we book a trip, that we perform tasks in the legal sector or legal area, in the wealth management area, in the insurance area, and many other areas. I've seen recently software or artificial intelligence that tells you how to find the cheapest mortgage. So does that mean that mortgage brokers will be obsolete at some point sometime down the road? I'm not so sure about that. I think it's going to take a long time for what is being created by these AI companies, Anthropic's Claude, or whether it's Grok from Elon Musk, whether it's ChatGPT or Gemini. All these different AI products are producing things so fast, so quickly for individuals to use. I've talked to some people who've created their own websites. I've talked to people that have created their own CRM systems to rival a Salesforce.com. And are these Fortune 500 companies going to just drop everything and start using these AI companies to cut down on costs and perhaps cut down on personnel? I'm not so sure that that's going to happen tomorrow, but perhaps over time, this may mean that the software industry may have to change. And we've seen software companies change in the past. This might be another time where they must do this as well. But we've also seen, as the headline says, we've seen these AI programs now start to spill over into other areas of the market. And that has really spooked the stock market. And that's why we've seen, in my opinion, a bit of a pullback in the month of February. When January, we saw a bit of an upswing. Markets were a little bit higher coming out of January. Now we've seen the markets give back what they made in Jan. On the S&P 500 as an example, the NASDAQ is now down for the year. TSX is still higher. Dow Jones is still higher. Obviously, the TSX, the Dow, not as heavily weighted in tech. So, I don't think that these systems out of the AI companies have affected TSX in general as much as they would the S&P 500, which is heavily invested in the tech space. Our first chart shows the drawdown in software and services and it is the worst since 2022, when we saw interest rates move up significantly. You can see also COVID pandemic is not so far off either. You can see on the far right-hand side, the current sell-off in software down about 29%. And that may have changed slightly in the last few days. I know tech coming on the air this afternoon, tech was up today. Tech was slightly up yesterday. So maybe we're starting to see some buying on the dip mentality for the general market. But I guess that will remain to be seen if we can see these software companies. I know Salesforce, for example, and ServiceNow, when they report earnings in the not so distant future, especially Salesforce, it'll be very interesting to see what their CEO, Mark Benioff, says and how he can convince the investment world and investors that his company is doing just fine. And we haven't really seen any negatives out of these big software companies. In fact, they continue to grow earnings substantially. So we'll have to see, and we'll all be waiting to see and hear comments made by Salesforce in their upcoming earnings release. Our next chart, entitled AI Fears Spread to Financial Brokerages, Data and Legal Services. So you can see here how a company like Raymond James has seen their share price fall. Charles Schwab, these are your do-it-yourself brokerages. You go online, you use Schwab's software, and able to figure out what to buy and what to sell if you do-it-yourself type of investor. Well, now AI is kind of taken over a little bit in that respect. You have MSCI, Moody's, and Thomson Reuters. We've seen Thomson Reuters, a darling of the TSX and the Toronto Stock Exchange, really get hit extremely hard. Information technology. A name like Thomson Reuters provides information to individual investors. Well, maybe individual investors don't need a Thomson Reuters right now. They can just go on to ChatGPT and ask it anything that they want. So we're starting to see AI really start to affect other areas, not just the software companies themselves. Our next chart shows the AI sell-off slams commercial real estate stocks. Look at the commercial real estate stocks. Cushman & Wakefield, a name that many of us know in North America. Because why are real estate or commercial real estate stocks falling? Well, if companies don't need as many employees, because AI is now taking the jobs of many employees, well, you don't need as much space in some of these buildings. And so we're seeing a lot of empty floors, perhaps, in some of the big towers in the United States and Canada. Perhaps just these companies are able to get by with fewer employees. So we're seeing it affect commercial real estate. The next chart here shows an interesting one. Trucking. Trucking firms join the list of industries hit by AI disruption fears. Funny story or interesting story. There was this company that was maybe 4 million in size. So a small cap company. Used to be a company that imported karaoke machines from China. Well, recently they came out and said they've created, using artificial intelligence, this whole program that allows trucking companies to get by with less people. They allow businesses not to maybe necessarily need these logistics companies for all their suite of products, that these companies can do a bunch of this stuff themselves. And this company created this program from AI, using AI. And what happened? Well, trucking sold off substantially that day that this was announced. And so here you have a company that wasn't even involved in trucking a little while ago. And they come out and say they can do things faster and cheaper. And we saw the trucking industry fall. So it's interesting how quickly artificial intelligence has moved from something that is benefiting companies, benefiting all of us, to something that is disrupting companies. And perhaps disruption is maybe not a good thing for many of us. It could mean a loss of jobs. And I think that's where the fear is, that we could see a loss of jobs and a loss of business for a lot of these, even Fortune 500 size businesses. We're going to have to keep an eye on that going forward. Our next point that I want individual investors to be focused on are NVIDIA earnings. And those earnings will be huge. And they're coming out, I believe, on the 25th of February. And as we know, NVIDIA, largest company in the world today, and they have their fingers really on everything artificial intelligence. They have their finger on the pulse of AI, probably more so than any other company out there today. Biggest chip maker, and as we all know, a company that makes up a very large component of the S&P 500. And our first chart actually shows us how big NVIDIA is and how much of the S&P they do make up, just under 7% now. Excuse me. And at one point made up over 8%, close to 10% of the S&P 500 for a very brief period of time. So when NVIDIA talks, we all definitely listen. Our next chart that we have shows a great way to show the dominance of NVIDIA. Let's put up our next chart. And it talks about data center segment revenue of NVIDIA versus AMD versus Intel versus IBM. And you can clearly see that when you go all the way down to the bottom of this chart, a little difficult to see, 41.1 billion versus 3.2 billion from AMD versus 3.9 billion from Intel versus 4 billion from IBM. And the chart on the right clearly shows the green line going straight up pretty much is NVIDIA. And in Q1 2023, things really took off and never really looked back. So again, so important to the data center, so important for everything. Obviously, NVIDIA makes chips for gaming and other things as well, but the data center, AI, that is where GPUs, that is where it's all at, and so important when NVIDIA comes out with earnings in about a week's time. Our next chart for NVIDIA, again, shows the ecosystem, and I think it's a fascinating chart. Look where NVIDIA sits in the ecosystem, right smack in the middle. You can see Nokia and ARM Holdings and CoreWeave and Intel on the left-hand side of NVIDIA. On the other side, you have XAI, OpenAI, Anthropic. These are your AI companies. You can see a lot of links to OpenAI. This is the parent company of ChatGPT. And a lot of people lately have been nervous because OpenAI has said that they have announced a number of contracts with NVIDIA, with Oracle, AMD, Broadcom, Microsoft. And a lot of people are nervous that they won't live up to those contracts. And that's been a bit of a scare as well. The spending that's going on with respect to these artificial intelligence type companies, the spending that's going on from these hyperscalers, the NVIDIAs of the world, the Googles, the Metas, the Amazon, spending hundreds of billions of dollars on artificial intelligence. NVIDIA is so important to all of that. And it is so important. And what are their earnings going to tell us? Well, if their earnings are soft, it's just going to tell us that maybe the industry is a little bit ahead of itself. Maybe it's spending too much and not getting enough back for what it's spending. If we find that NVIDIA earnings are just fine and going ahead full steam and growing substantially as they have been, well, that will give us a positive signal that AI itself is continuing its just massive build out and things are fantastic. So NVIDIA earnings, something to keep an eye on in about a week's time after the bell on Wednesday, February the 25th. Our third and final point that I wanted to mention to individual investors before you make your individual choices for your portfolio, I think you need to keep an eye on this coming Friday. Inflation data that's coming out, PCE, big indicator for the Fed, and GDP growth. How fast and how much is the U.S. growing at this point? We've heard 4%, 5%. GDP growth in the U.S. has done phenomenally well this past year. I think they only had one quarter where they had a bit of a hiccup. Otherwise, growth in the U.S. has been fantastic. Our first chart shows U.S. GDP growth, U.S. gross domestic product. There you have it, 4.3% in Q3, just under 4% in Q2 of last year. Q1, a bit of a hiccup. But if you look prior, in 2024, pretty good go of it. And we're hearing rumblings that Q4 maybe comes in closer to 5%. So we'll have to see how that looks on Friday. And what does that mean for full year growth from the U.S.? And maybe gives a boost to the U.S. dollar, which may mean a bit of a negative for things such as gold. Our next chart shows U.S. Consumer Price Index. You can see that basically inflation sitting around 2.5% in the U.S. right now, both core and the headline number. Our next chart, PCE, coming in at around 2.8%, core and the headline number as well. Remember, core is excluding volatile food and energy. So PCE will be a big number on Friday. It could tell us a lot as to where the Fed is going with respect to interest rates. And we know that if the Fed were to become more accommodative and cut interest rates, that usually means or bodes well for the stock market. Canada's inflation rate, in case you are wondering, we just received that data. There you have it. Also coming in and around 2.5%, depending on which measurement you look at. But overall, I think you can safely say that Canada's inflation rate is around 2.5%. So I think you want to look at those few things. You want to continue to keep an eye on what AI is doing to the software companies and how it's spreading throughout the economy as a whole. Definitely want to keep an eye on NVIDIA earnings. And last but definitely not least, let's take a look at what the inflation numbers and GDP numbers look like coming out of the US. That should set the tone for what the central bank in the US, the Federal Reserve, does at their upcoming meeting.